I do speak to a lot of mega billionaires and public companies about it. And I make a few points on this. One, that 320 billion, that is destroying $32 billion a year. They are destroying $3 billion a month in capital because they're generating a 3% after-tax yield at best, and the cost of capital is 15%. So take 12% negative real yield on that. That is the cost. Multiply 325 billion times 12%. That's what the shareholders are paying right now for that. The second point I make is, if you look at Microsoft, for example, 98.5% of the equity value of Microsoft is based on forward expectations of quarterly earnings. And 1.5% of the value of Microsoft is based upon tangible liquid assets. And another way to say it is Microsoft is 144 times levered to their quarterly earnings. If they earn 3 billion a quarter or X billion, whatever the number is a quarter, more than that, I guess, but you multiply it by 144x, right? And if they miss by $1 billion, it's 144 billion where you move. And the reason why operating companies are like that is because the SEC 33 Act and the SEC 40 Act required that operating companies hold no more than 40% of their liquid assets in securities. So normally they'd use treasury bills. And treasury bills, as we just showed on that chart, are toxic. It's toxic capital. It's poison. You might as well just inject poison into your veins, right? You're bleeding 10% of your capital a year. So they don't keep the capital. And Bitcoin is a major revolution because starting in 2025, you can account for Bitcoin on fair value basis, which means that Bitcoin is just as good as treasury bills. And it's a commodity. So you can have 100% of your balance sheet in Bitcoin. And what that means is Microsoft, if they just stopped dividending out their cash flow and stopped buying back their stock and they convert it to a Bitcoin buy, and you crank in like a conservative, like a 21% assumption, like half their cash flow in Bitcoin, you make $1 trillion over 10 years. You know, you put all your cash into Bitcoin, you make $2 to $4 trillion for the shareholders.
If Berkshire did that.
No, if Microsoft did it.
If
Berkshire did it, they would make more. If they flipped that, you know, put $300 billion into Bitcoin and grow 21%, you're generating $60 billion a year of investment income. I talk to people like Similar Scientific, you know, where the CEO calls me and says, I want to talk about what you did, explain it. And I'll get inbound calls from people that want to be on a Bitcoin standard, and I'll explain what we did and how we did it. And sometimes I'll brief the board of directors or the officers and directors. Sometimes it's politicians, sometimes it's governors, sometimes it's senators, sometimes it's congressmen, sometimes it's... I'd be willing to bet you that if I had an hour alone with Buffett in a calm environment, I'd walk out and he would say, this Bitcoin thing's a pretty good idea. Charlie would have liked it. We're going to buy some.
Have you made the cold call?
I have not.
Why not?
Because Bitcoin's on a need to know basis, and people have to feel like they need to understand it, like they've got a problem in order to have an open mind. And if they don't acknowledge they have a problem, they don't have an open mind, and they take a conventional view toward the world. It's like the people with a strong corporate view and a healthy company and a strong conviction in their company, they don't have an open mind to a profound paradigm shift. They don't want to embrace that idea.
Maybe the call to Buffett could be seen as a public service, and you want to be a public servant. So if you were to make that public service phone call and you guys sat down and spoke and you went to Omaha and all of a sudden he comes out and says, you know, we've made a decision to buy $100 billion of Bitcoin after my conversation with Michael Saylor. I think that's a public service.
I will say for the record, I'm happy to go visit anybody that has $100 billion of cash that's sitting and burning $10 billion of shareholder value a year. I will go visit you. I will provide you with all of the information you need in order to be convinced that you should flip to the Bitcoin standard. So, I mean, first of all, it's Cynthia Lummis has put forth the proposal that the United States establish a strategic Bitcoin reserve. It's a brilliant idea that she's presented to the Senate. The geopolitical logic here is simple. It's go where all the money is going to go and buy it first. And so if you knew that everybody was going to move to Manhattan and you could buy 20% of Manhattan in 1650, it would be a good idea. But maybe more to the point, the British came to the New World and they grabbed the New World, and that's what created the British Empire. So the United States runs the world's reserve currency, but Bitcoin is emerging as the world's reserve capital network if you just want to keep your money forever. And everybody in the world loves that idea. I'd like to just keep my money forever. So the smartest thing for the US to do is to buy up as much of that as they can. So you buy 1 million coin, that's 5% of the network. Buy 4 million coin, you got 20% of the network. Why not buy 20, 25, 30% of the network? If you buy the network, you can buy it for money, which is effectively free. In fact, you could just sell the gold, swap it to Bitcoin, and then as Bitcoin becomes 200, 300, 400 trillion dollar asset, right? You're sitting on anywhere from 40 to 80 trillion dollar gain. And so the logic of this is pretty clear. First of all the foreign capital in the world is going to be drawn into the Bitcoin network. So if the United States owns it, then that's like the same as the money coming to the US. You're just drawing capital from Russia, from China, from Africa, from South America. It's going to come to the US on the Bitcoin network if the US owns it. The second logic is all the capital from the 20th century is stampeding into the 21st century. So all the money that was invested in crappy bonds and decaying real estate and warehouses falling down and companies that are going out of business, all that money is going to go into the Bitcoin network. So you own the 21st century. And the third idea here is right now, a lot of people use U.S. sovereign debt as their capital asset, which, as I just pointed out, is minus 5%. Every business person knows it's not as good as the S&P index. So if people start to swap out the treasury bonds and they start to buy Bitcoin with it, then you would want to own the Bitcoin because that way you don't have to worry about people replacing the U.S. treasury asset with a Bitcoin asset because the U.S. owns Bitcoin too. So this defends the U.S. reserve currency status. It defends U.S. economic leadership. It attracts capital from our enemies. It attracts foreign capital, and it actually lays in place a peaceful, equitable solution to working out our differences with everybody in the world that a business person would appreciate. So yeah, like if you could buy Manhattan for free with 60 guilders or some glass beads or something, and you knew that it was the best port in North America, and one day all of Europe's going to come and do business in North America, it would be the best investment going.
How big of a victory was when you talk about the red wave when Trump won? And how different would the climate be today? Bitcoin right now is at what? 90, 91,000, 92,000, 89,000, whatever the number is. How different would it have been if it was a Kamala victory?
I think if you look at the difference between a red wave and a blue wave, I'll take the blue wave first. If it had been a blue wave, Bitcoin would grind up plus 20, 25%, 30% against resistance. And the rest of the digital assets industry would degrade down 20%. Like every digital exchanges, digital tokens, digital securities, digital currencies, they would degrade and Bitcoin would grind up. And there would be that tension that you see right now for the last 4 years where Bitcoin is grudgingly accepted, under protest, and the other ones are being attacked all the time. But I think the red wave was the headwind becomes a tailwind. Bitcoin surges up, not plus 20, but maybe plus 50 or plus 60. I think, we go from that to this. And then the digital assets industry goes from degrading down to surging up. It goes from minus 20 to now it's coming back. Now there's a little bit more uncertainty with digital assets because we got to wait till next year to figure out what the framework will be. But basically the polarity got switched from negatively polarized on the entire digital assets economy to positive with the red wave. And I think you just got to have a much more bullish view toward growth and prosperity and innovation in the next 4 years than you would have had in a blue wave.
Okay. So what do you think is going to be by the end of Trump, give or take? If you're saying in 21 years, it'll be 13 million. You're saying it'll be at 100,000 by the end of the year. What do you think it'll be by 2020?
I got a Bitcoin 24 model that's actually published on GitHub. You can Google it. And if you Google it, you can download it. And then you can crank in your assumptions and see our base case assumptions. And I think my base case assumptions, and it actually spits out the price of Bitcoin every year. And to tell you the truth, off the top of my head, I don't have the exact number for the end of 28. But I could tell you basically the model says it's like 55 growth to 52 to 50% a year.
Got it.
So it's like 50 to 45% growth a year for the next 4 years. And that's like doubling every 18 months or less than 18 months in that range.
I got it. So roughly 350. If we were to say $300,000 to $400,000, that's about the number.
I wouldn't be surprised. Yeah.
You wouldn't be surprised if it's a number like that. But because you're long term, you really don't care what it is. You're playing 21 years. You're not playing 4 years.
No, I'm in it forever. the investors are investing in the company because they want more Bitcoin. They don't want Bitcoin performance. They want to invest in a stock that can outperform Bitcoin. So we are a Bitcoin treasury company. And the way to think about us is if you just want straight Bitcoin exposure, you buy IBIT from BlackRock. And that's like overnight deposits. I'm buying, $1 million of Bitcoin, and if Bitcoin goes up 50% a year, I'm getting 50% a year, and I'm getting the downside and the upside. MicroStrategy will sell you bonds. We're basically the leading issuer of Bitcoin-backed bonds in the market. So what if you wanted the upside of Bitcoin without the downside? I want like 75% of the upside, but no downside or something like that. You buy the convertible bond. And so a lot of investors of ours are bond holders, and what they want is low risk, low volatility Bitcoin. And you can do that through those fixed income instruments. And then the equity holders, they want high voltage Bitcoin. They want 1.5x or 2x Bitcoin. Then you've got derivatives and the options guys. They want 10x leverage, and they want 10x long and 10x short. So ultimately, you've got different classes of investors. You've got the 10x short, the 10x long, the 3x. I use the analogy of Standard Oil or refinery. You put crude oil in one side of the refinery, and out comes kerosene, gasoline, and asphalt. And of course, you put kerosene in the jet engine, but you don't put crude oil in. And so what people want is they want refined petrochemical products. Or you could think of us as a transformer. I want high voltage power, and I also want low voltage power for my daughter's hairdryer. And you're like, well, you're losing if I put low voltage in a battery and I put it in my little kid's toy, it's very inefficient. There's a massive markup in it. But the point is the family wants batteries for the kids' toys. They don't want to electrocute Junior, right? So what we're doing is providing low voltage Bitcoin, high voltage Bitcoin. And the only way to do that is to have a 100% Bitcoin balance sheet. A lot of times people think volatility is a bad thing, but I would say it's like radioactivity and heat. And a lot of people are afraid of a fire and they're afraid of radioactivity, but you can't have nuclear power without radioactivity, and you can't have an internal combustion engine without a fire. And so MicroStrategy's put this crypto reactor in the middle of the company. And because we have that high volatility, high energy reactor, and people are like, aren't you going to diversify it? That's like taking this water and pouring it on the fire. Of course I'm not going to diversify it. Like, I give you fire, you're freezing to death, and the first thing you could think to do is throw water on it, right? So we're actually running the reactor, and that is really our unique value proposition to all those investors, and they can't get it except from a public company that's 100% committed to Bitcoin. It's clear we have a pro-crypto president. They're all in on crypto. They're all in on Bitcoin. They're progressive. They're all about freedom. And freedom means the 20th century securities regime was you got to spend $40 million on compliance to bring a company public. But what if I only want to raise $4 million in capital? How does it make sense that I got to spend $40 million on insurance in order to take a $4 million risk? So I think actually when we come January, depending upon who runs the SEC, I think you'll have a pro-digital assets SEC, a pro-digital assets Treasury, a pro-digital assets White House, a pro-digital House and Senate. Now, if you want the crypto industry to grow and prosper in the United States, you need a digital assets framework that is ethically sound, technically sound, economically sound. And that means this is a digital commodity. This is a digital security. This is a digital token. This is a digital currency. This is a digital NFT. This is a digital ABT, asset-backed token. If you define all those, and I did, by the way, in my keynote at Cantor Fitzgerald last Thursday, which has gone viral, I said, here is your digital asset classes. Now we need the regulators to give us that framework. Tell us how I issue, how I operate, how I own, how I trade. And if they do that well, I think actually we're going to see a massive explosion in digital assets in this country. There's no reason why half the equity on the NASDAQ can't start trading digitally. Why not Apple stock trade digitally 24/7, 365? Why not Katy Perry issue a Katy Perry token if she wants? I think that the law ought to be simpler. It ought to be just don't lie, cheat, and steal, right? Like if we go back to this, right? If you believe in free markets, the free market view would be, I'm going to give people a way to do these things and just remind them, don't lie, cheat, and steal. I'm going to give them a practical legal framework. If you do that, I think there's 400,000 big companies that are private. There's 400 million companies. And I think the note that I made last week is 0.06% of the businesses in America are able to tap the capital markets. And so we have a crushing, over-regulated capital market regulatory regime that started in 1933. And I think that you need an alignment of the White House, the Senate, and the House to put in place a freedom, innovation-oriented digital economy. So I would say right now, I'm fairly bullish it'll happen. I think they want to do it. And I think that, again, I don't recommend any particular security or any particular investment other than Bitcoin. But I do think that it's better for the world if we have hundreds of thousands of digital assets created, launched. And I'd like to see the industry go from $1 trillion of digital assets to $500 trillion of digital assets. I'm Bitcoin only, 100%. Like, the truth is, I wouldn't even recommend Apple stock. Like, there's no security. I'm not going to recommend
0% chance.
I wouldn't recommend a security because there's a counterparty to a security. But the position is, if you came public and you had your own security or token or whatever you had, I wouldn't recommend you either. But it's not because I'm not in favor of your business. I just think that you have to stay in your lane. I'm not going to give you recommendations on diet or politics or any particular investment other than to say, I think Bitcoin is digital capital and it's a long-term store of value. I think that there's a massive opportunity for digital currencies, and that would be like stable coins, Tether, Circle. If you look at how people want to transact in the world, they all want to move digital dollars at the speed of light. And the challenge is, in the US, there is no regulatory regime for a company or a bank or anyone to issue that stable coin. And I mean, there's two issues they got to resolve. Like, how do I back it? Presumably with treasuries. And then how much freedom do I have with regard to the transference? That's an AML KYC issue. And I think that under a red administration, you probably get a lot more freedom, but ultimately it's above my pay grade to decide that. I would just say that right now it's about $150 billion asset class, and it's very obvious the people have spoken. They want it. They need it. It's a humanitarian thing if you live in Venezuela or Cuba to have access to digital dollars. But I think that with a digital framework for digital currency that's endorsed by the administration, I think it goes from 150 to $1 trillion to $2 trillion to $10 trillion. And I actually think that that would create $10 trillion of demand for U.S. sovereign debt. It would be good for the dollar. But I also think that that would ripple through to China, to Russia, to South America, to Africa. The biggest geopolitical issue is our enemies and our friends may complain because nobody wants to use any currency other than the dollar. Look, no one wants to use the euro in Europe. They want to use the dollar in Europe. So you're going to actually have all sorts of politicians complaining to the State Department that our citizens are using the dollar. But if you want to spread the dollar to the world, you got to do it digitally. I think it would be good for American values, and ultimately it would be good for the world if we did support it.
Here are the key takeaways. Saylor argues that major companies are destroying capital by holding cash reserves with low yields, 3%, against higher capital costs, 15%. He suggests Bitcoin as a solution, noting that starting in 2025, companies can account for Bitcoin on a fair value basis, making it comparable to treasury bills. He projects significant potential gains for large companies like Microsoft or Berkshire Hathaway if they converted their cash reserves to Bitcoin, estimating potential gains of $1 to $4 trillion over 10 years. Regarding government policy, he supports Senator Lummis's proposal for a U.S. strategic Bitcoin reserve, arguing it would help maintain U.S. economic leadership and attract global capital. He views Bitcoin as the emerging world's reserve capital network. On price predictions, Saylor expects roughly 45 to 50% annual growth for Bitcoin over the next 4 years, suggesting potential prices of $300,000, $400,000 by the end of 2028. He positions his company, MicroStrategy, as a Bitcoin treasury company, offering various Bitcoin exposure options through bonds and equity, comparing it to a refinery that processes crude oil into different products for different needs. Saylor also advocates for a comprehensive digital assets framework in the U.S., suggesting that with proper regulation, the digital assets market could expand from $1 trillion to $500 trillion, particularly benefiting from the digitalization of traditional securities and the growth of stable coins.